Welcome to Bar Chart's series of educational webinars designed to enlighten you on a variety of trade ideas and concepts, inform you of pages and tools Bar Chart provides related to those concepts, as well as offering some trader's insight to help you make a more informed investment decision. Today's session, Trader's Guide to Understanding the Ichimoku Clouds. Now, this Japanese charting technique incorporates 5 essential components that help traders identify trends, entry and exit points, momentum, and levels of support and resistance. Now, it's based upon unique moving average inputs, and this technical analysis study, once mastered, offers traders Ichimoku one look to quickly judge current and potential price movement. Now, although there are many studies or strategies that are based upon the Ichimoku cloud, a command of the foundational strategy is crucial before adapting it to advanced and alternative strategies. Hello, everyone. My name is John Rowland, Bar Chart's head of trading education, and today I'm going to break down the 5 components of the Ichimoku cloud and explain their purpose in this trend identifying technical analysis system. Now I'm going to offer you some guidance and rules and some interpretations to gain some greater clarity, and I'll walk you through the foundational and one additional strategy using some real-world market examples. So if you're a fan of Japanese candlesticks, visual aspect of the battle between buyers and sellers, then the Ichimoku cloud is your gateway to a quick discernment of trend, momentum, and future support and resistance, all rolled into one study. Now, before we put our heads in the clouds, please welcome our moderator and Bar Charts project director, Jean Baker. Hello, Jean.
Hello, John. How are you?
Doing fine, and yourself?
I'm good, thank you. So I just want everybody out there to know that John's been practicing his Japanese all week, and I'm certainly hoping he's not going to turn it over to me at some point during the session to make some of these pronunciations. John, you've got this, though, right?
Konnichiwa.
Yeah.
All right, Jean, I like that. Let's get started then.
Okay.
Just a reminder that today's session is for educational purposes only, and decisions to buy, sell, or hold, or to trade securities or other investments involves risk and best being under advice of a qualified financial professional. And under normal circumstances, shall we be liable for any losses or damages or you or anyone else incurs as a result of trading investment activity that you or anyone engages based on the information or material you receive through barchart.com and our services. Okay. So as I said, in the beginning, this is a Japanese technique that was developed by a Japanese financial reporter, Hosoda, and it revolves around multiple moving averages. Each are unique in its calculations and placement on our chart. Now, though at first glance this can be quite overwhelming, I assure you that by the end of today's session, you will be able to see through the clutter and with one look, be able to determine trend, momentum, and support and resistance. Now, as I mentioned, the Ichimoku cloud is a collection of 5 components, each representing a distinctive characteristic of price movement, be it past, current, or potential future. Now, the 5 components are the Tenkan-sen short-term price movement, the conversion line, the Kijun-sen, the medium-term price movement, the baseline, the Chikou Span, which is the momentum of price, the lagging span, And then we have the cloud components, the Senkou, which is the leading span A, and the Senkou leading span B. Now, what typically some platforms do is they westernize these terms, and bar chart is no different from anyone else. We turn these Japanese words into English, and that's what I'm going to do today. I'm going to rely on those. But also what I've done in the slides is I've changed the color of the word to coordinate with the color that appears on our charts, okay? So the first is the conversion line. Well, let's do this first. Let me go to this is Amazon, and again, this process. This is a little bit overwhelming, maybe a little bit overwhelming for you, but what I want to do here is I'm going to just kind of identify these lines as we go through it in the beginning here. And so the first one is the light blue one, which is the conversion line. Now, what I want to do here is, like Gene was kind of kidding around. My Japanese is not that good, so I don't want to embarrass myself like I do when I go and try to order sushi. So I'm going to stick to the English versions of the descriptions of the different components. But what I want to do is look at these different pieces of information. So one of the things we can do here, and this is a new feature that we have on bar chart, is up here in the headline here, you can see the little eyeball here. And one of the things we can do now is we can hide plots or we can hide studies. So what I'm going to do is I'm just going to hide the chart of Amazon, the price action of Amazon. And so now it's a little bit more clear. So the blue line represents our conversation line, our conversion line, and that is a 9-period moving average. Our red line here is called our baseline, and that is a 26-period moving average. Then we have what is called our lagging span. This is the current price displaced by 26 periods. So what I did is I drew a little line here that says 26, and I'm just going to put it at the end of our lagging span, right there. And I'm going to turn our chart back on, and you'll see that there's current price, and this green line is displaced by 26 periods. Now we're going to go into more detail what each one of these means. And then the cloud, what that represents. And so we have a green line, that's our leading span A, and a red line, which is our leading span B. So let's start off with the conversion line. So the conversion line for us is going to represent the short-term price movement. And the formula for this one is kind of unique in terms that it's the highest high and the highest low from the last 9 periods. So this is unique because it represents a range of price. For instance, if I was using just a regular moving average, I might be using just the closing price. So let's go back to our chart, and what I'm going to do is I'm going to go up into the cloud here, and I'm going to turn off, all of these. These are the ones we're going to investigate as we go further. But I'm going to start with the conversion line, and let's turn back on our chart. And so this represents a 9-period moving average. Now, depending on the type of trader you are, you can also use this as a potential level of support or resistance. And also, if I'm a short-term trader or a swing trader, you could also use this as a potential a stopping out point. But here I have a 9-period simple moving average that I've had turned off. And let's turn that back on. And I want to kind of show you that it's very similar to these moving averages in terms of same period, but typically the conversion line is less sensitive and lagging. And that really goes to that point that it's a range of price. But again, you can see in some of the examples here where it might be a better line for either support or resistance, or also helping you maybe determine risk as an exit point. So again, it takes into that consideration of that intraday volatility, and we can, like I said, it can be used for a stop value. So that, if you think about this high and low data point, and that will help us define this intraday price movement, again, depending on the style of trader we are. The other thing is that in true moving average characteristics, it represents trend. Again, price above trend, right? That would be an uptrend. If price is below trend, then that would be a downtrend. And also, it can also be a conformational aspect of moving averages and trend line analysis. So it should be pointing in the direction of our trend. If it is, then it's a confirmation that we have a trend. And then that angle of inclination also can represent the strength of our trend. The steeper the angle, the stronger the trend. The flatter the angle, we might have what is termed as a trendless market. So a flat line would indicate that price may be consolidating for the short term. Now, it also, as I said, can act as a level of support and resistance, but we can also use this line as a line of action. Now, I already mentioned it as a potential exit point, depending on the type of trader you are, but we can also use it as a potential entry point. Think about in trend analysis, a correction phase or a minor pullback, let's say, of a trend. Then when price recaptures this trend line, this is an indication that our short-term trend is continuing. Now, the catch here is we really want to see price recapture a trending conversion line, not a flat line, but one that is actually either sloping up or down. Now, one additional thing that you can take away from the conversion line is that you can look at it in terms of where it is in relationship to price. So if price is deviating or diverges away from it, moves away from it, that could be a potential mean reversion setup, similar to like something you might hear in a Bollinger Band. So again, a measurement of confirmation of trend, a level of support or resistance, and also a potential for a re-entry, right? So again, level of support, or if price recaptures the line, that could be a continuation of our trend. The baseline is our medium term price movement. Now, this is the same as the conversion line, but it's just 26 periods versus the 9. Now, you will find as if you're getting more into cloud strategies that this one tends to be a keystone to many advanced cloud strategies. And we'll look at one in a bit. Again, in typical moving average trend line characteristics, it helps us define price in terms of a trend. So if price is above our baseline, that is bullish. If price is below, that is bearish. If the baseline is flat, we're in consolidation. And again, that direction of our trend, that confirmation can be defined by, that angle of inclination and also the strength of our trend. The greater the angle, the greater the strength. Now, for a price to influence the baseline, a trend of a minimum of 26 periods must be established. Now, this is key for us because if you think about the cloud strategy, as we learn about the cloud strategy here, the strength of the cloud strategy is identifying trend. Now, when we think about trend identifying studies, right, and if that are based on moving averages, well, moving average is a lagging indicator, right? 26 periods need to pass before we develop a potential trend. So in order for the baseline to respond, this trend has already been established for, let's say, 26 periods, that trend following. So it could be late to the party. But in a trend following system, depending how you look at it, this could either be a strength or this could be a weakness that a trend could already be established before the baseline actually recognizes this. Again, depending on your time frame. And then for this reason as well, it plays a crucial role in support and resistance in terms of our trend. So one of the three things can happen when price re-engages the baseline. So again, we can use this baseline as a line of action. And so one of the things we could look for is if we get a quick bounce, let's say a 1 period or a 2 period bounce, then we would see our short-term trend return. If we get a penetration and then a recapture of this line, then that would be a significant pullback, and that would also help us determine that the primary trend has been reestablished. And then the third scenario would be if price crosses the baseline and fails to recapture it, then this would be an indication of a trend reversal. Now, there are another additional things that you can think about. Like I said, with the conversion line, we can think about divergence away from price moving away. And that could be a sign of overbought or oversold and that potential mean reversion. So, how far could price move away from the baseline? That distance, right? That divergence, how do we kind of guide that, or how do we measure that? So one thing you could do is you could look at something called the average true range, and I would look at the average true range that is reflective of your moving average. But in the case of the convergence line, then maybe I look at the 9-day average true range, and I would say if it was 1.5 to 2 times greater than the ATR, the divergence, that might be potentially an opportunity for a mean reversion. And if I'm looking at, let's say, the baseline, which is a 26 period, well, on bar chart we have a 20 period ATR. Yeah, I would look at, let's say, if we diverge more than maybe 2.5 to 4 times that ATR, that would be a sign that probably price has gone too far away from the mean, and that we could set up for a mean reversion. Now, this is just a guidance rule. Again, this is not cut in stone. So I'm back with Amazon. And so what let me do is let me turn back on the baseline. And again, let's kind of look at a little history here. When we have a well-defined trend, sometimes we get these little 1 or 2 days touch and goes, and then our short-term trend reestablishes itself. Or, we could get, that reconfirmation of the primary trend. as we penetrate below and then recapture that line. And then also, it could also be a potential signal for a reversal when price penetrates the baseline and does not recapture it. Plus, it also acts as a level of support, which means that you could use it as a risk management tool, either support or, in this case, we look at it here, resistance. A one touch, quickly back into trend, a recapture, a reinforcement of the primary trend, and then a level of resistance in terms of risk management, in terms of our trend analysis. Okay, the lagging span. This is going to represent momentum of our price. And the lagging span is definitely a unique moving average in the sense that it takes current price, or not moving average, excuse me, let me rephrase that. The value is unique because it takes current price and it shifts it back 26 periods. Now, this is going to give you an immediate feedback on trend confirmation. So because of that, if price is above, excuse me, if the line is above price from 26 periods ago, that is interpreted as bullish. If the lagging span is below price from 26 periods ago, then that would be interpreted as a bearish signal. So let's go back to Amazon, and we're going to add back our lagging line. And again, what I have here is that 26 period. Here's current price. Here is the lagging span, this evergreen line, and currently it's above the price from 26 periods ago. So that would be interpreted as a bullish scenario. If I look over here and it is below, the period of 26 periods ago, then that would be interpreted as a bearish signal. Now, another thing that we can do with the lagging is it also consolidation, or if the lagging line span is near current price in terms of, excuse me, not current price, if it's near price from 26 periods ago, then that could be an indication that we're heading in to consolidation. Now remember, the line is displaced by 26. So what I'm really talking about is if the line is very near price from 26 periods ago, let's say 3 to 5, or maybe maybe as much as 10 periods forward, that would be a sign that you're probably entering into a period of consolidation. But also, what I want you to do is think about something which is called clear air, right? We want to see the lagging span have room to run. In other words, it's free to move. Now, if it has open space or this clear air, then that's a sign that momentum is strong or will continue to be strong. If it is near a level of support or resistance, then this will also indicate that momentum should wane. So support and resistance could be the price from 26 periods ago, but it also could be the cloud. Now we're going to look at the cloud in a moment, but the cloud could act as a level of support and resistance, and former peaks and valleys also can represent levels of support and resistance. Now, one of the cool features about the lagging span is if I find multiple peaks and valleys along a horizontal line, let's say a line of best fit, it will translate to a Fibonacci level. And this is kind of a fascinating aspect of the cloud strategy. So let's look at that. Here's Boeing. And again, let's kind of blow this up so we can look at it. And this is what I was kind of pointing out. So remember our 26 displacement here, 26 period displacement. So here we have, let's say, this beginning of this downtrend, right? This downtrend is coming in right about here. I think you could start making an argument that it looks like, you know, we are breaking down, or this trend is starting to develop. Now, if I displace this by 26 periods, right, where is our green line, our lagging span? Well, it is coming near the price from 26 periods. That is a sign that you might see a little bit of consolidation until price breaks away from it. Now, it also can be look at former peaks and valleys as levels of support and resistance. And you can see if I go back a little bit in time, there's multiple peaks here, right? Old resistance becomes new support, and that's where price kind of bounced off of from there. So we want to see that price breaks through these levels of support or resistance, as well as our green line. And so if we look at that, then we can see that price here broke through right about here. And at that point, then our green lagging span is now below our recent valley here, and there is some clear air. There's no other price near it, but again, the cloud could be an area where momentum might wane for a moment until we break through the cloud. And so the other aspect I said that is kind of interesting and fascinating with the lagging span is if you can line up several peaks and valleys. And I kind of drew this line. I would kind of call this a line of best fit. Here's a peak, there's a peak, there's a peak, there's that valley, right? Then what you can do is you can go to your Fibonacci's, and if we take this peak high and this peak low, and we look at our retracement, look how that lines up with that best line of fit. So this is something that is very unique to the cloud. For those of you who love Fibonacci's, I would try to use this technique to help you with, again, depending on what you use Fibonacci's for, either confirmation or targeting. All right, so let's talk about the cloud. So the cloud is formed by filling the gap between the leading span A, which is going to be this green line, and our leading span B. If A is above B, then the cloud is green. If B is above A, then the cloud is this kind of this pinkish red color. So the leading span A is the average of the conversion line and the baseline shifted forward 26 periods. And the leading B is that highest lowest average for 52 periods. And again, that is shifted forward 26 periods. So therefore, the cloud above or below current price is the leading A and B from 26 periods ago. And the future cloud is the current calculations projected 26 periods into the future. So what does the cloud really represent to us? Well, the cloud represents sentiment to the market. What is the current sentiment and what is the future sentiment of market? And then again, think about it in terms of trend. If price is above the cloud, that would be a positive or bullish sentiment. If it's below the cloud, then it would be a bearish sentiment in terms of our trend. Now, if price is inside the cloud, this would be a sign that we are trendless or we are transitioning from one trend to another. Now, the positioning of these lines, these leading span A and leading span B, can not only help us discern the sentiment of the market, but also the trend strength from the action that we're going to see from these leading lines. So, for instance, if they're both moving in the same directions in concert with our trend, then that would be an indication of a strong trend. Now, for uptrends, if the upper line is moving up and the lower line is flat, then that's an indication that our trend is at a medium strength. And if the upper line is down and the lower line is flat, then that's a sign that our trend is weak or weakening. And it would just be the opposite if we're talking about bear markets. Now, there are some other things we can discern from the cloud. It is also represents a major level of support and resistance. Now, as price gets closer to the cloud, it does have a greater influence on it. Now, this is the subjective part of the cloud study. So it might not touch the cloud or it might not go in the cloud, but the cloud is having some influence on price. The cloud will shrink during times of consolidation. During strong trends, you will typically see a thinner cloud. Thick clouds can also represent volatility. In other words, price action is kind of bouncing back and forth, or large gaps in price movement. Now, the future cloud, right, again, the thicker future cloud could indicate a potential consolidation, that higher volatility, and again, a trendlessness. Now, there is something that we need to discuss. So, for instance, here I'm in Boeing, and I've just opened up my chart. I have the study up. Is we have to talk about the future cloud. So, a lot of platforms, including bar chart, depending on how you set your settings for your templates or your charts, your site preferences, you might displace maybe 2 or 3 or 5 spaces to the right. But the future cloud, remember, is 26 spaces. So when you turn the study on, we automatically create that displacement in the chart. You just have to left click and drag over to find the future cloud. So that is something that you need to be aware of. Otherwise, you will be looking at just the current cloud and not that future cloud. Okay, so now that we have a basic understanding of the different components, let's talk strategy. So there are a lot of strategies that use the cloud system, right? But I think it's really important for us to talk about this foundational strategy, because a lot of other these strategies are built or based upon the components that are in the foundational strategy. Now, we're going to look at the foundational strategy, and then what is the basics of that is that all 5 components are in concert with our trend. Again, this is a trend identifying, trend following system. So the trend has to be established for all 5 of these to be in concert with a trend. Now we're going to look at the conversion baseline crossover, which is more like a moving average crossover, where we have a slow moving average versus a fast moving average. And we're going to use the cloud as that confirmation. Now, there are many additional strategies. I don't have the time to go into them, but these are just some of them that you can look up on your own. So let's talk about the foundational strategy in terms of how we are going to discern that trend alignment. And again, I'm going to just do this from the basic bullish conditions. Now, remember, the strength of the cloud systems is this confirmation tool of trend recognition, right? That, remember, one of our components, the baseline, takes 26 days to identify a trend. So we want to see price above our cloud. That would be the first condition. The second condition would be we want to see the blue line above the red line, the conversion above the base. We want to see our lagging span, that evergreen line, above past price. But don't also forget that we want to see it in clear space. We don't want to see it near previous price, and we don't want to see it near the cloud. We want the future cloud to be green. Again, future sentiment. And current price is near our conversion in baseline. We don't want it to be too far away. We don't want that divergence, because then price might come back and do that mean reversion. Again, what could we use that rule of a multiple of our ATR? And then we don't want our moving average or our momentum indicators to be in a thick cloud, right? We don't want it to be in a cloud. Now, a alternative version that's okay, or variation, would be if it's passing through a thin cloud. That would be okay. That would be a variation of bullish conditions. Now, for bearish conditions, everything would be the opposite in the first three, but the cloud would have to be red, the future cloud would be red, and the same two rules of the final two conditions. So let's go back to Boeing. And I like Boeing because we see two distinct trends here. So let's do that first. And let me get rid of our Fibonacci's. So let's look at the bullish scenario first. All right. So what was our first condition? We need to really see current price above the cloud. Well, we don't see that until price is way up there. But what would be one of the other conditions? Well, the blue line above the red. Well, we do see that here, right? And we want to see our evergreen line, our momentum line above, not near current price, and also above or below a potential level of resistance. So let's ignore the cloud for the moment. So we have an uptrending short term, we have an uptrending medium term. That could be a bullish signal, right? Price is trending up. Our 26 days, right? There's our line, and we go back, there's our green line, our 26 days. You know, we are very near a price from 26 days ago, and we still haven't cleared this potential resistance. So not until we get above here would we enter into clear space. There's a lot of clear space for us. Well, we also want to make sure that our future cloud is green. Again, if I use that displacement 26 periods, even at this point right here, you know, our future cloud is still pink. And it's not until about here do we still see, we get that green cloud. But again, where are we in terms of the current cloud? We're in the cloud, so we're not getting all five firing at the same time. And it's not until we really get to about here where price breaks through the cloud, our moving averages are above the cloud, our price is above the cloud, and our momentum green line is reaching, still has clear air. Now the cloud is here. That could potentially be a momentum pauser, and you can see that price, even though it still trended higher, it kind of paused a bit. And really, in terms of when our lagging span is clear, totally clear of all, it's not until we get up here. And again, that would put us right here in terms of price. Again, one of the limitations or the criticisms of the cloud system is that a lot of trend has already developed before we get that cloud system conversion. And in this point, all 5 components are telling us that we're in an uptrend. But again, you can see that price continues to move forward. Again, let's look at it from the downside here. Again, price is breaking below our moving averages. We're waiting our moving averages to get through the cloud right there, a thin cloud. We could maybe take a trade right in here. We haven't broken a previous pivot low based on our lagging span. Once it did here, once price got below outside of the cloud, that would have been a positive. And what would be the caveat? Well, at this 26 period, just about here would be where our cloud turned from green to red, confirming our downtrend. So not until about here did the cloud identify this downtrend. But again, you can see that it was a nice and clear down trend. So let's go back to Amazon. And I'm going to turn back on all my cloud for Amazon. And let's blow this up. So let's do this. Kind of gone through a lot of the different pieces. I've talked about some variations. And I promised you that what is the strength of the cloud system is identifying trend and also be able to look at, with one glance, and to be able to discern momentum, trend, and potential support and resistance. So that's what I'm going to do here. What I'm going to do is I'm just going to leave this here for a second. And what do you see, right? What do you see in terms of trend? What do you see in terms of momentum and support and resistance? Now, to help you out a little bit, let's turn off our chart. Well, this is what I see. My lagging span represents momentum. My momentum is waning, right? It's turning sideways. It looks like I have more clear air to the upside, meaning there's more potential or bullish momentum potentially in the market. What's my short-term moving average? Well, it's still trending up, but it is getting a little bit flat, an indication of consolidation. What's my medium trend? My medium trend is very strong, right? Very strong. And it's still trending up. So that would be a bullish indication. And what is my future cloud? What is the sentiment of the market? Well, the market is telling us, based on the cloud, right? We have the red line is flat and our green line is up. Bullish in terms of a green cloud, but only a medium strength trend. So either our trend is starting to gather or maybe is kind of slowing down. A large green cloud also represents volatility, a lot of back and forth price movement. And now I put the chart back on, and that's exactly what we see, right? We see a market that is still trending higher. Its momentum is slowing, right? There's still a lot of bullishness in the market. If I'm looking for a price to continue to move higher, the green cloud says that, hey, we need to hold above these levels. So again, in terms of risk management, as long as we stay above the baseline and above the cloud, this would be an opportunity just to go long, but we could use this to manage our risk. If price broke below our baseline or entered into our cloud, that might be a sign that this trend is changing. Where is our lagging span? Well, our lagging span is very close to a horizontal price. And if we think about vertical up and down, right, there's more room for momentum to the upside as long as we can break above recent peak highs. And you can see we're kind of right in that area right now. So if we broke above this peak high, that would be a confirmation that our momentum is positive again, as price probably breaks out of this particular range. So let's do this. That's Amazon, but here's the S&P. And what I've done here is, again, now let's look at this in terms of, I'm not really want to think about all the different components together. I just want to kind of look at this in one glance. Can I discern trend, momentum, and support and resistance? And then this one, I think you can see it's a lot clearer, right? Momentum is strong. Our moving averages are still moving up. We're above a positive or green cloud, right? We've just broken above a recent pivot high or peak of our lagging, which represents a recent high, a recent peak, and we're gathering a lot more momentum. There's a lot of clear space. Our trend is still up. We're still staying above our trend line, right? The only concern I might have is that we might diverged too far away from our baseline, but and our volatility, right? Our green cloud is telling us there's a little bit more volatility. Probably want to see our cloud get a little bit narrow or as price moves higher. All right, so let me take a moment here. Let me see. I see a few questions that are coming. Let me go back and look at some of these questions that you folks have sent through.
Yeah,
Gene, so
and
give me a second. Yeah.
while John is reviewing the questions, let me just point out that a lot of you are asking for the slides that John has been showing during the presentation. That is available for you under the Learn menu under Archived Webinars. And if you go there, you'll see today's session. That's where the recording is going to be showing up a little bit later on this afternoon, but you can download the slides from that page. Also, a few questions about, how do you add this? This is a study available in interactive charts. So just open up the study button there and search for Ichimoku, and you'll find it.
Yeah, I'll show you that in a moment. You can go just here in studies. You can just type in IC. By the way, Gene, very good on the pronunciation. And there is the
Hey,
Ichimoku
thanks. I
Cloud.
was practicing too.
And another thing which you can do is you can go into the Learn under the technical indicators and open that up, and that'll give you a lot of the details of a lot of the things that I just explained to you in the webinar, the formulations, what they represent, the calculations, and some of the what the differences between the cloud and moving averages, some of the limitations. I think I went into a pretty good in-depth in it. So one of the questions I see here is, does this work in multiple time frames for, let's say, day trading? So again, like all trend following systems or technical indicators, it's important for you to understand that, the higher the time frame, the more relevant the trend following system. So yes, you can use it in multiple time frames. And a matter of fact, from my research and studies on this one is that there's a lot of information that says that it really works very well in weekly timeframes, higher timeframes for our investment traders. Again, we're kind of getting this crossover um, um, of the baseline and conversion line, and that's when I want to go into the second strategy. But if I go to, say, a hourly time frame, what again, you might see a trend developing at an intermediate or a lower intraday time frame. But I think where the cloud struggles a lot of times is you might get a lot of false signals as it kind of vibrates back and forth. But again, on a 60-minute time frame, by the time it identifies your trend, if you're a day trader, your trend might be over or your day might be over. So I think there's some relevance in terms of how much time you want to look at. It seems like it does a little bit better in dailies and weeklies, but yes, you can use it in multiple time frames. I see Gene answered a lot of your questions, and I'm reading some of these questions as myself, and I think we've covered a lot of these questions. So let's do this. Let's go back to our slides, and let's talk about this conversion baseline crossover. And the reason why I kind of like this one is it's very similar to a lot of other trend following systems, these moving average crossovers, and that the signals are originated by this conversion line crossing the baseline, the fast crossing the slow. So some of the additional conditions that we can look for, and I'm going to take this again from a bullish signal, is we want to see the blue line over the red line. We want to see price above our cloud or breaking through a thin cloud. Again, we want to make sure our lagging span has entered into clear air or that open space, and our future cloud should be green. And potentially, we really would like to see a thin cloud. Now, for bearish, it would just be the opposite. It would be breaking below. Again, price below the cloud. We want to see a red future cloud. Okay, so let's go back to Boeing. And again, here we can see that blue line crosses the red line. That would be the beginning of that bullish condition, right? But we still have to get through this thick cloud, so that would not be ideal. But if you wanted to take this trade, what you could do on a risk management aspect is I would set a realistic target on the outer edge of this pink cloud. Again, at the time we got the crossover, our lagging line had yet to clear the near price. So not until we got above here, actually, that would be the price in here. Now we're in the cloud. That would have been your bullish confirmation. Let's look at it from the bearish side. Again, I'll make this a little bit larger so you can see it. Right here is that crossover, right? That would be a bearish or a sell signal, right? Again, we are entering into a thin cloud. That would be a more optimal situation, right? But again, our green line, our lagging span has yet to get into clear air. And then it's not until, our crossover and then our moving averages break through the cloud and our green line finds some clear space, would that be a better entry signal? So again, the conversion baseline crossover is not necessarily an immediate signal. You might still need other confirmations to take the trade, but you can start using, those trend lines and former clouds as potential targets or risk management. All right. So there's a couple of people are asking to look at a specific stock. I'm not going to do that. I apologize. I just want to kind of stick to the basics. Robbie is asking, how does this work in other asset markets? So again, I think one of the things you could do, for instance, let's say Forex, from what I've been told, I don't trade Forex, that the cloud system does work very well in the Forex. But if you think about Forex traders, what is their timeline, or what is most Forex traders, there are probably more like swing traders, and they're looking at probably daily and weekly charts. Again, a confirmation that trend following systems do a lot better in higher time frames. Okay. All right. So, Gene, we're at the top of the hour. I apologize if I didn't get to everybody's questions. If you really feel need to have your question answered, please send them to support@barchart.com, and hopefully our folks there can help you. And if your questions, if they can't answer the question, they'll pass it along to me, and I'll try to get to that as well. So let's just talk about one takeaway. And like all technical analysis indicators, it should be part of a trade plan to enhance or identify potential setups. It shouldn't be the reason why you're taking the trade, right? That plans should contain assessments of risk and realistic targets. So in the terms of trend following systems, right? You want to stay in a trend as long as that trend is continuing going. A target is not a bad thing, right? It doesn't mean that we have to exit the trade when we reach the target. It just means that it might offer us an opportunity to manage risk, right? So again, the takeaway here is this is really about adding to your trade plan, right? Any system that you use should be based on risk and reward, right? The cloud strength is confirming trends, right? After a trend has developed, and it's helping our traders capture a part of that prevailing trend that's in control. The trend has already been established. Now we're going to try to jump on that train and, so to speak, ride it into the cloud. And again, all trading is really about risk reward, and risk reward is up to the individual trader. Okay. All right, Gene. Let's see where we're at. So next week, our upcoming webinar is not up yet. That will be up sometime in the next couple of days, but we're going to look at two new screeners that we've put on our website, and one of them will be kind of a trend following screener, and the other one is maybe be able to find candidates as a new trend develops. So come back next week and check that out. Until next week, be safe out there, manage your risk, the best of health, and the good of all trading.